China's death toll from the virus has now reached 213, with the number of confirmed cases nearing 10,000, and markets are plunging around the world today. Joining me now is Joel Shulman. He is the CEO of ERShares. Joel, good to have you here. A painful way to head into the weekend with the sell-off. Is the market overreacting to this virus?
As a matter of fact, I think that's the key word. I think the market is overreacting. We need to put things in perspective. I mean, there's certain industries that are seriously affected in China. The casino industry in the Macau area, it's essentially a ghost town. And stocks like LVS, Las Vegas Sands, and WYNN have about 90% of the revenues and profits from Macau. So when we see, actually from China and the regional area, so when we see Macau being shut down, that's going to have a serious effect on them. We were hearing about Starbucks and McDonald's, but there's some stocks on the front lines of this. There's also ramifications of this. But what a lot of people don't realize or put it in perspective is that, while this is a big issue, I'm not diminishing the issue here in the number of deaths. I'm certainly not diminishing. But, last year we had something like 60 million people in the United States that had the flu, the regular flu, and we had something like 60,000 people who died, and we had about 500,000 that went into the hospital. So the country is always going to have, and unfortunately our country and many other countries are always going to have these sorts of health issues. So the question is, why is it that some markets are dropping so significantly on this news? And U.S. small caps, which are somewhat insulated from these problems, is dropped 2% plus today, and I think it's an overreaction.
Yeah, so small caps, right, with really hardly any exposure, if any, to China, getting sort of caught up in the selling. Let's talk about some of the positives here, because people are picking and choosing in this market today. Amazon, higher. Was there anything about that report that got you worried?
Well, so first of all, no. We invest in publicly traded entrepreneurial companies. Amazon's one of our biggest holdings across the board. We get in large cap and small cap. One of the interesting things about Amazon is that Amazon is a high-profile stock. It's now joined the $1 trillion club along with Apple, Microsoft. But what a lot of people don't know, there are only a handful of companies out of the Fortune 500 that create jobs. And a statistic that was buried is that Amazon created 23% new jobs, 150,000 jobs. And in this market, when you look at the S&P 500, which has 24 million jobs, and it doesn't really move that much. It's really 20 or 30 primarily publicly traded entrepreneurial companies that are creating these jobs, like Amazon. Companies like Walmart, by the way, lost 130,000 jobs last year. So we've got a contrast in terms of what's creating jobs, what's helping move the economy forward for the United States.
Back to China. On Monday, investors there are going to have their first chance to react to all of the coronavirus news, because their markets have been closed since the 23rd. When they do open, are you expecting a sell-off? And if you do, will that ripple across the globe? And could we start to see even more pressure here as traders face margin calls?
Well, that's possible. Not everybody, is levered like that. But what we've seen is an 8% drop-off in the China markets, since January 22nd. They're now down 2-3% for the month, and they may continue to weaken because of the infrastructure issues and shutting down. So it's not an insignificant problem for China. I think there's an overreaction in the rest of the world. So we may see some initial sell-off. There may be some ripple effects, but at some point the market's going to wake up and say, okay, was this an overreaction? Are there some stocks that are insulated from this risk, and maybe they went down with everything? And so when we see baskets being traded, as we often do now, so much money is in the ETF world. It's passively invested. Money goes in, markets go up, money goes out, markets go down. And so there are a lot of stocks buried in beneath within these sectors and within these baskets. Amazon happens to bubble up today because it's in the news, right? But there are a lot of other stocks like Amazon, and primarily publicly traded entrepreneurial companies and primarily small cap companies that we think will do well in 2020.
Before we let you go, tell me if you can, share a few of those names with me, because some people may be seeing the sell-off and going, wait a minute, this is opportunity for me. So those who are looking for opportunities, give us some names.
Well, okay, so we look across the board, and there's certain sectors. So I would, rather than say specific names, I say certain sectors that, so for example, there's some high-tech sectors that they overreacted to the China effect. So what I often do, and people in our team, they look to see how much effect they have. Their databases like Capital IQ, SEC disclosure, you can see what percentage of the revenues are coming from China. So Las Vegas Sands and WYNN, you see 90% coming from that region. So I would say some tech stocks, primarily U.S.-based stocks, or dealing with Europe. I think travel stocks, have been hammered. At some point, when the market turns, those things are probably going to go back up because there was a strong negative reaction in casinos and travel.
The airline stocks,
I think tech and healthcare. I mean, a lot of healthcare stocks. And by the way, there's some companies that are profiting from this. I just, right before this show, I got a text from a company in China that's representing experts in China. They're saying, hey, you don't want to fly to China? Why don't we come and you'll chat with our experts virtually. So there are opportunistic plays in this market.
All right, don't go into hiding, right? Joel Shulman, thanks so much.